After 5 days of consecutive gains, and that also in the week prior to the monthly expiry, everybody is on the lookout for when is this market going to pause. In fact, some are also arguing every time I actually say that the markets have bottomed out. The counter argument is you're thinking too early, things are too bad, this is just a counter trend move, and it's not going to run away to new highs. Now these are all different arguments. You can say the trend is positive but will not go to new highs. Now that's fair, because surely at some point of time markets will pause. The other one is to say that no, the worst is not over because the news is all bad. But which market ever bottomed on good news? It doesn't happen that way. Neither does sentiment remain good, because everybody is losing money on their portfolio. So sentiment generally tends to be negative at the bottoms, and the news tends to be bad. And that's when you have to take that decision based on data points that tell you that yes, things are as bad as they were at a previous low in the market, and that is why sentiment might be as bad as it was at that previous bottom that we remember. And that is why we use data analytics from Strike that we've put together, including diffusion indicators, breadth indicators, everything that allows us to really make that judgment call, based on which I've been saying that yes, the worst is over, irrespective whether you feel it or you don't right now. But of course, you will get corrections along the way, whether they'll be 1-day corrections, 2-day corrections, and whether it'll just end up being a sideways move. So the levels to watch will be 22,500, maybe 23,500, 23,800. These are going to be the immediate levels where we'll see whether it does finally give you a pause, and that pause also might just end up being a 1 or 2-day correction or sideways move, nothing significant, because of rotation. Now what is this rotation? Say we are all buying stocks, but we buy our own favorite. So everybody is buying their favorite. So individual stocks run up for a few days, then they start pulling back. But when it comes to the index, because somebody is buying something or the other every day, getting convinced, the index keeps getting pushed higher and higher and higher. And that is why rotation keeps index in better momentum on a day-to-day basis versus stocks. But stocks give much bigger percentage moves, and that is why the volatility that you pay for buying stock options is usually higher than index options. So that's my roundup. I think March and April tend to be seasonally good. The percentage gains can vary. This year everything is happening a month early, so the March gains are actually going to look pretty nice after February, which looked pretty bad. But April should not be too bad either.